Cool. Welcome, everyone. While we wait for guys to log in, today we've got another series in incredible knowledge sharing. And today's topic, obviously brought to you by SMUCB Group, is all things uranium. Now, Rob, in his true sense, has rallied together three of the sharpest minds to come and chat about one of the most exciting commodities. And without further ado, I would like to hand over to the ringleader of Cats and Chiefs, Mr. Sir Rob Hersov. Over to you, Rob.
Thank you, Patrick. I've got my lion tamer jacket on here, so that does fit with the theme. About a month and a half ago, Dorian said to me, he said, everyone's banging on about gold as a safe haven. Clearly, it is a safe haven, and there's trading it and the physical gold. But he said, but that's not all. He said there are other areas no one's noticing, and I reckon uranium is going to move. He said, I think uranium is particularly interesting, not only from the supply-demand dynamics, but the sort of macro dynamics of what's going on in the world. And he kind of went on and on a bit about it. So I decided, okay, time to actually do a reading and listen. And he has been right, because uranium is moving. And this is a particularly interesting story, and you'll hear why. And Dorian has kindly got our guests to speak. And this is our first presentation of a company, and presentation of a company within an exciting macro environment. So it'll be about 30 minutes of presentation, then there'll be a Q&A. Over to Dorian, who has seen the light.
Thanks, Rob. Good afternoon, guys. It gives me great pleasure to introduce two old friends today. We have Amir Adnani, who's the founder, CEO, and president of Uranium Energy Corp, which trades on the NYSE Amex exchange. We also have Scott Melbye, who's the executive vice president of Uranium Energy Corp. Scott is a 35-year veteran in the uranium space. He's worked at Kazatomprom as an advisor, Uranium One, had a 22-year stint at Cameco, where he ended as a president. Scott's going to start off by talking about the supply-demand dynamics of the sector, and then we're going to pass it on to Amir to speak specifically about Uranium Energy Corp. Over to you, Scott.
Great, thank you, Dorian. And Lauren, you can cue the first slide. Let's go to next. We'll go into the, actually the third slide. Good. Well, really, it's a pleasure to talk to you all today about uranium, which Dorian and Rob have already teed up here as, frankly, one of the best performing commodities in the world today, and a commodity that's up close to 30% here over the last month, which, as we've gone into 2020, has been one of the most turbulent years we've seen in many years in terms of financial markets. So to have uranium moving so dramatically, we're seeing a lot of attention paid on the space again. But I think before I go into some of the reasons why things are moving so dramatically today, I think it's important to unpack the story a bit further, that the fundamentals for uranium going into 2020 were already, there was much fundamental reason for optimism on both the supply and demand side. Certainly nuclear energy, which I think only in recent years, the last 3 or 4 years, has begun to be more appreciated for its baseload carbon-free energy, pollution-free energy, and we've always known that in the industry. But more importantly, we're beginning to convert those that on the environmental side or the climate change community that would be traditionally opponents to our form of energy, and either dropping their opposition or becoming much more in favor of nuclear as part of the solution to deliver baseload clean carbon-free energy. But if we move to the next slide, really kind of gives you an idea of where the uranium price has been. Obviously, this current cycle, this bear market that we've been in for the last 9 years, is one of the steepest, deepest, and longest running bear markets that we've seen of any commodity in recent years. That has caused a lot of fundamental things to happen on the production side. I guess it's important to note that uranium does not behave, it's not as liquid and efficient as a market like copper, gold, zinc, or silver, where price signals dictate immediate production supply increases or supply decreases. We have a large percentage of hedged contracting with the nuclear utilities who buy the uranium for their power plants. We also have a very long lead time. I think it's hard to build a mine anywhere in the world today. Try getting a uranium mine permitted and licensed. It's a 7, 8, 9-year, 10-year process. So we can tend to have price signals falling as we've had since the Fukushima event, yet production globally only peaked in November of 2016 and began to reduce significantly in the past 3 years. Having been in the uranium industry 35 years, this is not something new to me. I think we saw it in the 2005 to 2007 period, where we saw uranium prices increase from as low as $10 a pound all the way to $138 a pound in a similar situation as we have today. Underinvestment on the supply side. We were beginning to see nuclear power plants being ordered and built around the world, and we saw the resulting price increase. We have a very similar situation now where prices that have been in the $20 per pound will hardly incentivize much uranium production around the world. But as we'll show in the next slide, the demand for uranium is probably the best it's been in the past 25 years. Lauren, could you cue the next slide? So if we look at the sheer numbers, and this may surprise people to see how robust this nuclear power growth is. We've had 47 new reactors come online in the last 7 years. We have 54 units under construction. If we look at the World Nuclear Association's forecasts, the industry organization out of London, in the base case, they're projecting 2% year-over-year growth in nuclear generation going forward. Even the most pessimistic case has flat to slight increases in nuclear power growth. More importantly, from uranium consumption, we've now returned to pre-Fukushima levels in terms of the amount of uranium utilities around the world consume in a year, which is around 180 to 190 million pounds of uranium per year. So the underlying demand story could not be more robust. But let's turn to the supply side in the next slide. So the real story since 2017 have been the production cuts. And this is before, these are figures that have resulted prior to any impact from COVID-19 and recent cuts to production that we've seen in the last month. So demand is running at 180 to 190 million pounds a year. Primary production was expected to be about 142 million pounds in 2020. Depending on what happens with coronavirus, mine shut-ins and the length of those, this could be considerably below that, but we're already at a 40 to 50 million pound gap between production and consumption. The deficit being made up by inventories, but we're very quickly seeing those inventories consumed. In many cases, like producers like Cameco, the big Canadian producer with mines in Saskatchewan and Kazakhstan and the United States, they've shut in production and chose to buy material off the market to fill their very significant long-term contract book. So, as we look forward, the cumulative gap by 2030 is 510 million pounds of uranium that's going to need to be mined, either from restarts of mines or new mines that need to be developed in the coming years. The next slide will kind of emphasize the COVID-19 impact. And this is obviously something, this has really been the tipping point. Again, I don't want you to think that this has been the driver. I think the fundamentals of supply and demand over the last 3 years have really got us to this point. But it was COVID-19 and the impact on the health and safety of mines and affected communities around the world, where mining companies have made the decision to shut in production and sideline some of the largest mines in the world. To date, the mines that have been announced in terms of shutdowns, we have Canada's Cigar Lake in Kazakhstan, which is the largest uranium mining country in the world today, has announced very significant cutbacks of all of their mines. We're hearing that some of these small communities, Taukent, Shymkent, Chile, these small communities in Kazakhstan that support the mining operations, things have not really topped out there in terms of their coronavirus impact. So we're continuing to watch that very closely. But the country of Namibia has essentially shut in all of its uranium production. Rossing, Husab, two big mines that are owned by the Chinese, and South Africa have shut in their production. But that's approximately 60% of global production is now shut in, or about 7 million pounds. So again, we have to assume that COVID is a temporary impact, hopefully, on our global economy and the uranium industry. But every month these mines are down, you can take 7 million pounds of production out of the mix. So it's really a rebalancing, an accelerated rebalancing of something that was already happening going into 2020. The next slide, please. So if we look at the supply and demand picture, this is TradeTech, which is a market analyst out of Colorado. The green line shows the close to 200 million pounds a year of uranium consumption by global utilities. The gray bars represent existing production. The blue bars represent secondary supplies. And this is an outlook that was made before the coronavirus impact. So this is going to have to be revised. And so for every 7 million pounds of production that's shut in, we have to take another 7 million pounds out of the secondary supplies and inventories. And I can tell you, since we've been in a rebalancing phase since 2017, we're now getting to a point where the cupboards are beginning to get quite bare in terms of what's available to meet the gap. That's going to have to come from new mines, and that's what's shown in the yellow area in this graph, is the need for new mines. What's important is that, as we said, it takes 6, 7, 8, 9, 10 years to bring on a new mine if you're starting from permitting, licensing, and construction. So we're already within the lead time needed to bring on the mine capacity to meet the gap. So just as the uranium market, this inefficient uranium market was impacted very negatively in an oversupplied market, when this market swings to undersupply like we're in presently, we could have much higher prices but not have the production responses needed to meet the gap. So it presents a very interesting investment thesis. Next slide, please. So really the bottom line on uranium market, you have robust demand growth, the best reactor growth in the last 25 years, continued emphasis on lower carbon electricity is positive for nuclear, and so we continue to see 2% annual growth year over year in the coming years. We've seen severe underinvestment and supply cutbacks all around the world, very similar to what we saw in the last really big bull cycle in 2005 to 2007. We're well within the lead times. The COVID-19, you can put your own assumptions on how long this is going to impact our economy and the uranium industry, but it's presently 60% of global production is shut in. The next big shoe to drop is the utility procurement cycle. And while utilities had been covered under long-term contracts from the last cycle, they were just now coming to a point where they need to come to the market and resume very significant spot, medium-term, and long-term contracting, which hasn't happened in the last 6 or 7 years. Obviously, speculative interest is always present in any commodity. And I think as the uranium market starts to recover, you'll also see some financials and others buying up uranium in addition to the equities, which are already on the move. So obviously the upward volatility in price is inevitable. It's already happening. With that, I'll turn to the next slide and really transition to Amir. But if you can cue the next slide. Before I turn it over to Amir, I can say that as a second generation uranium miner in the United States, I can say that it's an incredible situation when we look at where the U.S. is in all this. The U.S. is the largest consumer of nuclear power in the world today. They consume 50 million pounds of uranium annually. Yet because of the depressed market conditions and the impact of some of these state-owned entities in Russia and Kazakhstan, we've seen uranium production decrease to about 0 today. So with that, I want to turn it over to Amir to talk about what the Trump administration is doing to help revitalize the industry, and more importantly, what UEC has done to position themselves to really capitalize on that situation as a leading American uranium producer. With that, Amir.
Okay, thank you, Scott, and thank you, Rob and Dorian, for hosting us. If I can go to the next slide, please. Uranium Energy Corp is a U.S. The one prior to this, slide 11, please. There we go. Okay, just a quick introduction on Uranium Energy. This company is a U.S.-based company. As Dorian mentioned, we're listed on the NYSE American under the ticker symbol UEC. As the founder of the company, I've been at the helm as CEO for 15 years. And it's remarkable to think that 15 years ago, what drew me into this opportunity as an entrepreneur was looking at the fact that the U.S. was importing 90% of its uranium requirements. And I remember the first time I told Dorian that 10 years ago that the United States was importing 10% of its uranium 90% of its uranium requirements. It resonated with him. It's resonated with anyone, frankly, who's looked at this opportunity with some common sense to say, this doesn't make sense for a commodity that is so vital for energy independence. How could we be importing so much of that? It used to be that people would then say, oh, well, Canada's just to the north. The US is going to get it from Canada. Well, look at the situation today. There's not a single operating uranium mine in North America. Even the Canadians have been squeezed out by state-owned companies, mainly in Russia and Kazakhstan, who have been dumping a lot of uranium into the market, driving the price down, playing the same games that you see Russia and Saudi Arabia play in the oil market to try to squeeze it to the US shale players. And this has been going on in uranium for even longer. And so here we have a situation where our company, UEC, is positioned as a US-based independent uranium company that has licensed facilities for production of uranium. You can see on that image there, that's the flag of the state of Texas next to the flag of the United States. And I can tell you today, with what Scott just touched on, the fact that you look at what COVID-19 has really done to everyone's mindset. It's not all about supply chains. It's all about, where does my supply chain come from? Even when I sit around our breakfast table this morning, my 12-year-old, my 10-year-old now question where even the most basic things come from. And I think the world will forever change after this, and it will be less acceptable to utilities and their fuel buyers to say, oh, we're totally fine to be getting all of our uranium from Kazakhstan. We're totally fine to be getting all of our uranium from Russia. And so with that, with UEC, not only do we have a company that has licensed facilities, but we're a proven producer. Our company produced uranium for 4 years between 2010 and 2014. We have production profile that's permitted of up to 4 million pounds per year. We have infrastructure that's already built. That's our Hobson processing plant that I'll talk about. And what have we been doing as a company over the last few years since we shut our production in? You guys ever heard of this saying, it's good to buy your Christmas decoration for Christmas in January? And that's basically what we've been doing. We've been aggressively buying up assets during what was a bear market. Scott talked about it. It's been a long, brutal bear market for uranium. And so if you look at our business today, the size of our asset base is almost 3 times larger today than it was pre-Fukushima, when we were almost a $1 billion market cap company. And today we're a $150 million market cap company, but with 3 times more in assets that we acquired during the bottom of the cycle over the last few years to add on top of what we already had. And today, so you can say we have over 100 million pounds of uranium in the ground. Those are independently verified under the 43101 system, measured, indicated, and inferred. If we can go to the next slide, please. And just looking at our asset base in a second, I consider our people a huge part of our asset base, because there's a shortage of people in the uranium business. In the last 15 years, you didn't come out of college and say, let me go get a job in uranium mining. This wasn't the place to go. There's a shortage of human capital. And when you look at our team, you have as the chairman of our company, Spencer Abraham, a former United States Energy Secretary. We're the only uranium company, especially in the US, that has a former cabinet member, a former energy secretary as chairman. Scott, who you just heard from, 35 years in uranium mining only with Cameco, Kazatomprom, Uranium-1. You look at our technical team, individuals, just a few listed at the bottom there, but all uranium miners, people that with our company in our 15 years have gone through all the steps that you need to go through to acquire, permit, develop, build, and produce uranium. We cover the full spectrum with our team, the full capability. And we have skin in the game in terms of how much money either we've put into the company or equity compensation we've taken to truly align ourselves with investors, not to mention to be at a business for over 10 years. Again, as I mentioned, 15 years, you can see we're truly committed to what we're doing on a long-term basis as well. Next slide, please. And so what I really want to emphasize are what the key things are, in my opinion, to get into production. What do you need to have in order to have a leg up? So if you're not familiar, the key here really is about permits and more permits. Uranium mining is a very permit intensive business. After aerospace and defense, it is way more permit intensive to mine uranium than it is to mine gold or copper or to extract oil and gas. So in a sector that takes up to 7 years, and that's the best case, 7 years to get a permit to mine uranium, we have the benefit here whereby our projects in the US, in Texas and Wyoming are fully permitted. I repeat, fully permitted. And if you're a company that doesn't have permits, and tomorrow the uranium price gets to, let's say, $100 per pound, but if you don't have the permits to go build and produce uranium, what good is that? And I think that, to me, those are the hard questions that when the sector starts to attract attention from big institutional investors, generalist investors that don't own this sector, these are the kinds of questions that will affect someone's ability to say, when can you get to cash flow? And so not only do we have the permits, but we have the infrastructure. So you look here, the two images on the slide. On the left-hand side, that's our Palangana mine. That's in Texas. That's built already. You look at the right-hand side. That's our Hobson processing plant with 2 million pounds of physical capacity. That's built already. That's on standby. That can come back online within months. And so not only don't you have the permit requirement, but a lot of the upfront capital requirement to build a mining asset, we've already taken care of that. This company has already gotten itself into production previously. So now it's about a production restart. Finally, again, to put some numbers in perspective, and I'll repeat it again later, but between these permitted assets that you see on this slide, we can produce up to 4 million pounds of uranium that's under permit. So I'm not talking about blue sky potential. I'm talking about what you can develop. 4 million pounds of American produced uranium at a time when American production is at zero and American demand is at 50 million pounds per year. This is, I mean, I don't know of too many other industries, even today, with demand that slowed down, where there's that kind of a supply demand gap, 50 million of demand versus zero of supply. And we can fill 4 million of that. And I can tell you, for us, we have more permitted capacity to produce uranium using, and this is the next thing I'm going to talk about, using the in situ recovery method. Next slide, please. And the in situ recovery method is really important to sort of discuss for a second, because again, in uranium mining, unlike other commodities, this process plays a big role. In other commodities, you typically mine using conventional mining, which is open pit or underground. In uranium mining, 40% of production, or just slightly more than 40%, is produced using what's called in situ recovery. I'll shorten that to ISR. ISR production was invented in the United States over 30 years ago. It has to do with targeting a certain style of uranium deposit. That's where the uranium is hosted in sandstone. So first of all, Mother Nature has to be there. You can't force this method of mining on every kind of deposit. Once you have sandstone hosted uranium deposit, on this slide that you see here, there are 6 steps from top left all the way down to bottom right. The 6 steps that take place are, number 1, at the top left-hand side. Step 1, you find your shallow sandstone-hosted uranium deposit, and instead of digging a pit or going underground, you're drilling wells that are 100 to 150 meters deep. You inject water in solution in the case of US, you inject acid in the case of Kazakh production. You recover uranium in solution. So there's no earth moving involved. There's no all the expensive aspects of conventional mining, which involves earth moving, which involves digging, excavation, explosives. None of those none of those activities are present here. And then you can follow me quickly here. We go from step 1, top left-hand side, where we extract the uranium in solution. We go to step 2, top right-hand side. The uranium in solution is brought back to surface. We go through an ion exchange process to be able to ship the uranium to a central site. That's where we go through the process of elution, precipitation, filtering, and vacuum dryer. That's how we get to uranium without any crushing, without any milling, again, that's how this type of mining is both environmentally friendly and low cost. Next slide, please. And so when you look at our company's production, our company's expertise, our company's permits, it's this type or style of mining that we're focused on. We have the expertise in this, we have the permits in this. In South Texas, we have what we call our hub and spoke strategy. Our hub is a central processing plant at Hobson, fully built, capacity of 2 million pounds per year. And the spokes are individual mines where this in-situ recovery method would take place. The one furthest to the south, called Palangana, is already built. This is where we operated. We'll talk about the numbers in a second. And then the other 2 projects just to the northeast of that, Brook Hollow and Goliad. These are projects that we've permitted over the last 5 to 6 years. Our offices are in Corpus Christi, right in the heart of the South Texas uranium belt. The United States Geological Survey has published studies that shows this uranium belt is the least explored in the United States and in the world for uranium potential, has uranium potential that is world-class, and there could be up to 200 million pounds of additional uranium discovered. This is all according to the US Geological Survey. We've so far consolidated these 6 projects. We have more acreage under control here in different projects. We've discovered 20 million pounds of uranium here, but we've hardly done exploration because the uranium price wasn't high enough to support exploration. So rather, we focused on permitting, acquisitions, I think there's incredible untapped potential to be able to discover more uranium here. But we're not talking about that when we talk about what's permitted. We're just talking about permitted pounds that we can produce. But I don't want you to forget about the upside or not be aware of it. Next slide, please. This is a big advantage of ours, is our infrastructure, the Hobson plant. This is one of only 5 processing plants that can be quickly turned back on. In fact, I think it's actually 4 when you consider that Cameco may be probably not reluctant to restart in the US. Next slide, please. So the fact that we have the infrastructure puts us really in the driver's seat. Let's look at some numbers quickly. We built the first mine, Palangana, for $10 million, 6-month construction timeline. Our production costs from actual operations were just under $22 per pound. And just last year, we received a 10-year renewal permit for 10 years of additional production. And our other projects in this uranium belt in South Texas, Goliad and Brook Hollow, will have similar cost profile and similar capital requirement profile. If anyone on this call has heard a mining presentation before, they would know to say $10 million capex or to build an operation for $10 million is incredibly low. Mining projects, open pit mining, underground mining these days starts at 500 million. In Canada, it could be as high as $2 billion. The big advantage here is that the upfront capital requirements with in-situ recovery is truly on the low end of the capital intensity curve, and operating costs are also in first quartile, second quartile costs. Next slide, please. And then again, you can see an aerial view here quickly of our first mine, Palangana. This is what we're talking about. We're talking about fairly flat surfaces where these types of deposits are found. We got year-round warm weather in South Texas, so we don't have to winterize the operation. It's fairly green. If you just had to look at this picture and guess what it was, you wouldn't guess there was a uranium mining operation going on here. And so it's got a very small footprint, very environmentally friendly. You can see why it costs $10 million, because you're just drilling wells. You're drilling water wells, you're casing them, you got some pumps at the top, and that's how you're recovering and mining uranium. And this is how the world's biggest uranium producer has become so such a force. Kazatomprom, the country of Kazakhstan, is using this method, not conventional mining, not digging a hole in the ground. This is the mining method that has made Kazatomprom world's #1 producer, a single nation OPEC. Okay, comparing it, the share of production. And that's why we believe this is the most competitive way to build new production that can compete with the guys that are #1 moving forward. Next slide, please. These are the trucks we use to transport the uranium from the mine to the plant. This is our own truck. Next slide, please. Very quickly, this is our Burke Hollow project. This is our second project to come online in Texas. Next slide, please. And this project has already gone through pre-production drilling last year to prepare the project for production. And next step is to complete our production area 1 through additional drilling, our various permits that have been granted already. Next slide. This is what really gives us the next level of production growth, our Reno Creek project in Wyoming's very productive Powder River Basin. In Wyoming, we're surrounded by Cameco and Uranium One, and our Reno Creek project is the largest permitted pre-construction ISR uranium project in the United States. This is what really gets the attention of Trump, Wilbur Ross, the Department of Energy. They know this project. The chairman of our company, who's, again, as I mentioned, a former energy secretary, when he talks to people at the White House, when he talks to people at the Department of Energy, they look at the Reno Creek project and they see this as a great and large source of new uranium that can come online and meet the needs of the U.S. government in the future. We've received a permit last year that allows construction of our central processing plant and ISR well fields. Those permits are in hand. Next slide. And I'm going to wrap up here in a minute. And so again, just the details about the project: 26 million pounds of measured and indicated resources. And this is actually the first time since the 1980s that this very historic project, Reno Creek, was a project that was discovered in the 80s and in the 70s and was developed in the 80s and 90s under various different owners. First time that through a string of acquisitions we made in the last few years, buying from different owners and different bits and pieces of this, we've consolidated this project for the first time since the 1980s under one ownership. Next slide. And this is just quickly to show you how long it takes to permit a uranium mine in the US. And a mining-friendly place like Wyoming still takes 7 years. Why I keep harping on about permits, because this is the barrier to entry is permits. Next slide. Okay, to sum it up and to wrap it up, our company has about $20 million of cash and listed securities. The listed securities we own are in a company called Uranium Royalty Corp that we were a foundational shareholder in. Uranium Royalty Corp is the first and only uranium royalty company, and it's listed on the TSX Venture. UEC has 183 million shares outstanding. At 82 cents, we're trading at about 150 million market cap. We have 20 million of long-term debt where it just becomes due in 2022. And it's with Li Ka-shing out of Hong Kong and Rick Rule and Sprott Asset Management. We are covered by 4 analysts, a number of institutional shareholders that are listed on the slide that own us, listed on the NYSE in the US. At 82 cents, we're trading at really near our 10-year low. Just a year ago, this company was trading at $1.60 when there was expectation of Trump introducing quotas on U.S. uranium. When he didn't, that really caused great disappointment amongst investors. And we had one round of sell-off, and then we had the virus round of sell-off. And now here we are at a most interesting dislocation. uranium price at a 4-year high, and our share price near our 10-year low. Next slide. I'll just wrap it up, and I know I might be a few minutes over my allotted time, but basically in a nutshell, look, it's exciting, first of all, to have an audience like this. It's been a bit of a lonely environment for uranium companies. So Rob, we don't normally, we're not used to this, but the sector is used in the past of having a lot of great attention. We've been there, seen what those bull market cycles look like. And today what we bring into the early innings of the next bull market in uranium is a company that is 15 years in the making, doing the hard work of getting permits that can allow us to produce uranium, having the track record of being a uranium producer, using the low cost and environmentally friendly in-situ recovery method, and doing it in places that allows us to mine uranium. These are mining friendly areas, Texas and Wyoming, and we've shown that with the history we have there. Finally, yes, there's a global uranium price recovery, but the cherry on top is if you can produce uranium in the US, because you get to have that additional buyer of uranium in the US government. And we're well positioned not only for the global market rebalancing, but to be the leading supplier of uranium in the US market, where demand is at 50 million a year and production is at 0. And to have our projects already be advanced enough where we can have that quick move forward, have great speed to get ahead of the competition. And I'll stop there, turn it over to questions. And again, thank you for you guys for taking part in this so far.
Amir, thank you very much. Dorian, over to you.
Thanks, Amir, and thanks, Rob. So we have the first question from Ross Gregory, who asks, why does nuclear have such a bad reputation, considering there are only really 2 major nuclear disasters in the past 50 years? And secondly, why do countries continue to persist with coal, given the impact on the environment when we have the cleanest energy available in nuclear?
Yeah, well, Greg, that is an excellent question. And I think it really comes down to the rhetoric around energy meeting reality. And what I mean by that is it's very easy for politicians to talk about energy and renewables and clean green energy and everything else. But the reality is there's no better baseload clean source of energy than nuclear energy. And it's only been in, like I said, the last 2 or 3 years that we're beginning to win over some of these former opponents to proponents. But listen, you've got to get your energy from somewhere. Okay, gas has less carbon emissions than coal, but still has carbon emissions. And if you produce enough from gas, you haven't achieved any reductions. Germany is seeing that. They tried to go to a green energy by relying, spending 200 billion euros on renewables and moving away from nuclear, and it's only resulted in a high reliance on natural gas from Russia, which is not always a good idea. They've not achieved any carbon emission reductions, and they have electricity prices that are 50% higher than that of neighboring nuclear France. So again, I think on the safety record, nuclear energy is the safest form of energy in terms of gigawatts, terawatts produced since the 1950s. It's the safest form of energy we have. It has suffered from that perception gap, but I think we're beginning to see a shift in public attitudes much more favorably towards nuclear going forward, and we're seeing it in new plants being built.
Thank you, Scott. So the next question, and I apologize if I really hope I'm not going to butcher the name. Zukili Numvete asks, what is the future of uranium mining considering the global move towards solar and wind, the so-called cleaner energy?
Yeah, I mean, I think that's the same answer is we cannot, something that runs 25 or 35% of the time, which is the case with solar or wind, cannot be 100% of our energy supplies. It just, the math and science doesn't add up. Now, we've seen leaders in the tech industries, Bill Gates, others, Peter Thiel point this out and become big backers and proponents of nuclear energy. But it's just the reality that something that doesn't run more than 30% of the time can't be 100% of our energy. So nuclear can be, an important part of the mix going forward. It is in countries like the United States. It's 20% of our electricity generation, but it's 60% of our carbon-free electricity. So we think the benefits of nuclear energy really are beginning to be more realized more widely. And there's also additional markets in small modular reactors, which are the small 50 to 100 megawatt reactors, which are a good fit to coexist on grids that are heavily reliant on renewables or are influenced, like the United States, from cheap natural gas. So I think the future for nuclear is as bright as it's been perhaps in my career.
Thank you. Next question is from Justin Swartz for Amir. How do you allocate your time between Uranium Energy Corp and your other company, Gold Mining? Are you operationally involved there?
No, I'm the founder and chairman of Gold Mining, and I'm the CEO of Uranium Energy Corp. In the last 15 years, I've only been the CEO of one company, and that's Uranium Energy. And so my time operationally, or the responsibilities as CEO, only are with UEC. But of course, as an entrepreneur, I'm fond of what I call the two yellow metals, and really proud and excited about what our team has built at Gold Mining, and very excited about obviously what we're doing and building, and excited for at UEC.
And actually, something worth mentioning, Amir, please confirm, but I believe in the 15 years that you've been at the helm of Uranium Energy Corp, you've never sold any shares. Is that correct?
Correct. There may have been maybe some shares sold as part of an option exercise 5 years ago. We're talking like maybe 50,000 out of millions of shares that I own. But from my holdings from founding the company and further purchases I've made, Dorian, in the open market, I have never sold a single share in the 15 years I've been with this company. Correct.
Great, thanks. Next question from David Kuz. Great explanation and good outlook. Thank you. I have a question about Cameco's strategy at Cigar Lake. Are they doing this for the greater good of the industry, or are they forced to do this? Is Cameco to uranium what Saudi Arabia is to OPEC?
Yeah, that's a very perceptive question. I would say that, Cameco had already dialed back, the world's largest, richest mine, which is the McArthur River mine in Saskatchewan, purely based on the economic considerations. They wanted to preserve that asset in the ground, buy uranium off the market to fill their portfolio while prices were low. The Cigar Lake decision to come offline was, I think, purely driven by health and safety of their employees and their affected communities. But I think the decision for them to restart the mine will be purely commercial. And so what that means is we could have the coronavirus conditions improve in Canada, but you might not see Cigar Lake come back online as quickly as you might think, because Cameco is intent on rebalancing this market. They've stated that they will keep these mines down until they get the reasonable return that they expect for assets of that quality. And for them, that means $45, $50 a pound selling price. So again, even though COVID might peak and start tapering off, you might not see, and we're also hearing out of Kazakhstan, that it may just be practically very difficult for them to ramp back up. They've ceased all the well field drilling on all of their 21 projects across Kazakhstan. Well, that's the precursor to production, and it will take quite a while and a lag time for them to even get back up to where they were previously.
Thanks, Scott. And then a couple of quick questions from Jason. Can you comment on what percentage of demand could be filled by multiple mines restarting mines currently in production, which can expand production relatively quickly, i.e. Kazakhstan? And the second question, are there any current or future constraints to global transportation of the uranium product that would benefit mining in the USA?
Yeah, Lauren, if you can put up slide number 8, if that's easy to do. That supply and demand projection that we spoke to earlier assumes that these mines currently in standby are back into production. So the gap that you see shown in the yellow area on that graph, slide number 8, please. The yellow area in that graph represents new mines that need to be brought on. And as Amir said, if you're not permitted, licensed, and ready to move forward, it's going to be quite a long time before some of these new mines reach production. But these gray bars already assume that the mines that are currently in standby, are coming back online at some point. Now, it may not be immediately. Many of these mines need higher prices. That's one of the reasons why these mines have shut in, is they've would rather keep the pounds in the ground and sell them into a $45, $50 market. Now, that's the best mines in the world can be incentivized at that level. Most mines need $60, $70 plus. So we've got a long ways to go, but that's a really bullish part of the investment thesis. In transportation constraints, uranium's unusual in that it's got the most energy density of any energy commodity. So it's not unreasonable to see uranium that could be mined in Texas, converted to a UF6 gas in Canada, enriched in the UK, and be fabricated into fuel in Sweden and end up in a reactor in France. There's that much energy in value in such a small package that it truly is a global commodity. Now, could transportation lines be impacted in the South China Sea or things happening in the Middle East? Sure. And so, I think North American utilities are definitely looking at North American uranium supplies a lot more strategically these days with everything going on around the world.
Next question is from Harold. What are some of the biggest environmental risks associated with ISR mining?
Go ahead, Amir.
What we typically spend the greatest amount of time on during our permitting process, besides the fact that obviously you must get stakeholder support for project development, most of the risk or concern is typically around the underground injection program or licensing, whereby we need to demonstrate through at least a couple of years of testing that there are confining geological structures above and below. So think of an ice cream sandwich, and the area that you're mining is the ice cream in the middle, and you've got a couple of layers above and below it. And so it's important to show that kind of vertical confinements exist in structural layers of aquiclodes that could be confining the sandstone above and below, so that there's no movement of solution or excursion into other areas. And then secondly, demonstrating through our monitor well ring installation, which is a safeguard of making sure that if there's any horizontal excursions, that we capture that through ongoing monitoring. In over 30 years of uranium, ISR uranium mining in the US, water well has never been contaminated as a result of ISR mining. But the challenge or risk in permitting, which I think goes maybe to the heart of your question, really is testing for that. Testing for capturing excursions, testing to make sure that both vertical and horizontal confinements and testing safeguards are in place.
Amir, I think another thing to add too is that the leach solutions that we're using are sodium bicarbonate, which are very environmentally friendly. It's essentially Perrier water, which reverses the natural process that deposited the uranium there in the first place. We're just oxidizing the uranium and removing it in the opposite to the way it was deposited by nature in the first place. So it's a very friendly process.
Thank you. So the next question is from Mohammed Dorat. On the upcoming contract renewals, what would be the main determinants behind the pricing of uranium?
Well, the question is whether the main determinant is pricing. I think utilities during the depressed commodity cycle had gotten quite complacent. And what's ironic is during the period of highest uranium prices globally, the utilities around the world signed record volumes of long-term contracts at record high prices. During periods of very low uranium prices, they have a perceived comfort with the future risk of supply of uranium going forward. They've been very content to just live off the spot market and do carry trades with traders, which buy uranium today and finance it and sell it forward to utilities. That's only as good as cheap financing is available, low cost of money, and abundant spot supplies. But as that changes, the power in the pricing and long-term contracts goes back to the producers. I can tell you in my time at Cameco, during that the bull market years, we were signing 60, 70, 80, even $100 a pound escalated contracts for 10 million pounds over 10 years with TEPCO, for example. So the power in the market can shift quite quickly, and I think we're beginning to see the beginnings of that in the spot market moving. And there's a debate whether the spot market drives the long-term price or the long-term price pulls up the spot. I think the answer is both. They interplay off of each other, and we're beginning to see that interplay in the very early stages right now.
Amir, the next question is from a friend of the company that you know, Adrian Fay, is asking, as UEC currently holds deposits and mines which are on care and maintenance, will you have to come to the market in order to fund the capex and working capital requirements in the event of sufficiently economical price and long-term contract?
Yeah, so at this point, we're looking to see, Adrian, where when we get the right catalyst to ramp up our activities. I mean, it all goes hand in hand in the sense that if we get the right uranium price, whether it's from a U.S. utility or this U.S. National Reserve, and so let's say the price we're looking for a restart is at $45 per pound and $50 to construct a new project like Reno Creek. Clearly, at those prices, we would, if we have a contract in hand, we would then look for funding vis-a-vis the contract in hand. And so with, today with the share price at these levels and no contract in hand yet, we're not going to go out there and fund the development of a new project. And so in the state of Wyoming, there are programs. There's a state development program that supports through low interest coupon development and construction of new mines. The last couple of uranium mines that were built in Wyoming benefited from this. So that's debt. It's available for construction. And so we could look at that for the Reno Creek project. But again, you would do that once you have the right pricing in hand. And in Texas right now, again, I could tell you there's enormous interest from the state government and the federal government for any industrial activity that can create jobs in the U.S., especially in rural areas. South Texas is a rural area. And we create a very different kind of job than oil and gas industry. Oil and gas industry jobs are transient. You move from location to location. Our jobs are great for building community and supporting local communities because you go to the same mine site for 10 years or more. And that's what, that's where the support really is strong. And there's all sorts of programs that we think are going to come. Frankly, I think the next stimulus bill that is going to be introduced, which is going to be energy and infrastructure focused, from what we're seeing and hearing, will have great incentives in it to help restart and development of projects that fall in the strategic category for energy. Uranium is definitely strategic, and it's been studied. And not only that, there's a presidential memo dated July 12, 2019, where the President of the United States says there's a national security concern on too much import of uranium, and we got to do something about it. So this is probably the most studied, and I don't know of too many other commodities or sectors that have a presidential memo sitting there saying, we believe this is a case of national security. So again, to answer your question, we're going to look to see better uranium prices, higher share prices, and non-dilutive ways of funding the capital requirements to build our uranium mines. But even there, Adrian, for our Reno Creek project, which is our highest capex project, our highest capex project is $55 million. Again, compare that to conventional mining that starts at $500 million and more. So again, it's all relative, but relative to in-situ recovery, relative to conventional mining, in-situ recovery truly has that competitive advantage of how much capital is needed up front. And that is where ISR wins the day every time.
Amir, there's a question here which I suspect you're not going to be able to answer, but maybe you can skirt around it. or I can help you. But a question from one of our audience who's basically saying they've just bought the stock at 90 cents. And what is your expectation for the stock price over the next 12 months or so? If you'd rather I have a stab at it,
I'd love for you to take a stab at it. I'll just provide some facts and numbers around our share price right now at 90 cents. Okay, at 90 cents, we are, again, just perspective. The last 2 years, okay, in the last 2 years, let's go 3 years. In the last 3 years, the uranium price was at $24 per pound. Today, the uranium price is at $32 per pound and seems to be going higher with the supply disruptions and other factors Scott described. In the last 3 years, our share price between $1.50 to $2 was such a stable of a range that we did $100 million worth of either capital raise. We did over $50 million between $1.50 to $1.60 and issued stock at over $1.50 a share to big asset managers like Pacific Road Capital, a multi-billion-dollar private equity group out of Australia, took our stock at $1.50 a share to sell us the Reno Creek project. So you have a company whose securities have been transacted in financings or taken by multi-billion-dollar private equity groups at $1.50 to $2 in the last 3 years at a uranium price $10 lower than where we are today. So at 90 cents, I think that's just the perspective I would have, first of all. Second of all, from a technical point of view on the stock, and Dorian, I know you don't like moving averages, but at 90 cents, this is the first time we're trading at or slightly above our 200-day moving average in 1 year. I think the 200-day moving average is about 89 or 90 cents. But look, there's an analyst report that just came out as we're speaking, with a target of $3.50 on the company. And I'm happy, Rob, to send that to you and Dorian so you can get it out to the rest of the group as well. But those are my comments on a bit of perspective around the current share price.
Dorian, we're going to have to wrap at the hour, but there's some good news on the stock price today.
Yeah, the stock's moving very nicely. It's up 12% as we speak. The final question was actually coincidentally from Rob, but I think that was partly answered. And Rob was asking about any sort of US government announcement which could negatively or positively impact the sector or the stock. Rob, assuming you're happy with the answer that's already been given, maybe it's time to wrap up.
Yeah, I just want to thank you guys very much for being on this call. You know, Dorian, you really have seen the light on this one, and you're 1 out of 1 with me, which is a hell of a statistic. But what a company, guys. And, you know, I'm a big believer now because I've been telling everyone the only safe haven I can think of is gold, but there's another one here. And this is on fundamentals, which is even better. So we've had a lot of requests for the recording, and we're going to send that out. But guys, thank you very much and congratulations, and you deserve your success. Well done.
Thank you very much.
Okay.
Thank you.